السلام عليكم ورحمة الله. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday, the 20th of October 2024, and I'll be doing the weekly market review. Starting with the XY, here we have the weekly time frame chart. As you can see, the price is just running up higher non-stop, and this is just me looking back at the seasonal tendencies. They just made a big difference with how I trade because they're not a panacea, they're not a be all end all, but they are a roadmap that I can be following and expecting from price to be following. So as you can see, price has rallied up higher towards this SIBI, sell-side imbalance, buy-side inefficiency, and we've created a favorite gap here, a busy buy-side imbalance, sell-side inefficiency. So I'll be expecting price to to have a bit of a retracement here into this internal range liquidity, or even it can go deeper towards this area right there, and then we can see a reaction and a continuation to the upside. Going to the daily time frame chart, as you can see, we have an immediate rebalance right there. The price is just running up higher, took out the buy side liquidity right there, and we're likely to see a bit of a retracement here in the XY. So from the low to the high, that's the dealing range. This is the midpoint, which is the equilibrium. We're looking for discount, which is going to be below the midpoint. We have this favorite gap. This favorite gap, we're looking at the weekly invergent favorite gap and the original favorite gap that price can visit. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. Now I'm looking at the target, which is at 6,000. 6,000 is just a level, it's a big figure. So because it's a big figure, I'm aiming at it as a means of a bias, as a means of a drawn liquidity. There is not any past information or price action that has traded toward to the 6,000 before. So go to your charts and mark the 6,000 level, and we also have the sell side liquidity here, two equal lows and the favorite gap. So if price wants to trade down lower, we have the sell side liquidity, and below the sell side liquidity, we have the continuation of this favorite gap, the BC. So it can take out the sell side liquidity and fill some of that favorite gap. It can reach to the compartment, to the quadrant level, or to the low. Now I'm aiming to one of the two sides. If price, I'm just sitting on the sidelines, and once I see price attack either one of these two levels, if it runs up higher towards the buy side liquidity, I'll be expecting a run to the sell side liquidity. If it runs by tomorrow, now what I want, preferably I want to see price just run up higher to the 6,000 level, because it's closer to it than it being retracing to the sell side liquidity or attacking the sell side liquidity. So a run up higher here on Monday, that would be like the manipulation, and then some accumulation here at the 6,000 level, and then the distribution that's attacking the sell side liquidity right there and reaching to this bullish order block. Now, how we trade based on this bullish order block, how we trade and react of it, that will determine the next move. Otherwise, if we see price disrespect the midpoint of this bullish order block, then we'll be expecting price to just run down lower, take out this side liquidity, reach to the cost portion of this discount wick. So it's just like we're demanding more intel. We want to see what's the market presenting us with, and based on the information or intel that the market is presenting us with, we'll be able to pretty much trade the markets. Going to the daily time frame chart, as you can see, I really want you to pay very close attention to this high right there, and how price created higher high, because this is gonna be we're gonna be looking at NQ and how the market has traded right there. Now we have relative equal lows at the same thing here, and we have this favorite gap. So as I mentioned, we took out the buy side liquidity. Now I'm expecting price either to take out the sell side liquidity or reach to the 6,000 level right there. either or, because if price attacks the buy side liquidity that I'm aiming at, which is this 6,000 level, I'll be expecting price to run down lower to the sell side liquidity, and these two equal lows cannot be left in the market. Don't expect the market is gonna be just keeping them intact and just continue running up higher. The market will likely run lower to the sell side liquidity to these two equal lows by next week. This is not by any chance financial advice. It's based on the experience and knowledge that I'm presenting. So that's going to be pretty much it for ES. Going to NQ. Here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, NQ has taken the buy side liquidity right there. It's still yet to reach and make a all-time high. So it didn't make the all-time high as the ES did, but it's slowly pushing. So we took out the buy side liquidity. We didn't take out this buy side liquidity yet, and we have the sell side liquidity here. We have two relative equal lows. Going to the daily time frame chart, as you can see, price has created a high here and a lower high. So if price started running down lower, taking out this low, this is highly likely that we will be seeing a sell program, because the SMT up there is like confirming to us that NQ is weaker to the downside. So if we start sell program by next week and we take out this low and we start running down lower towards this February gap, NQ will be the fastest pair or the fastest market index to run down lower when compared to ES and Dow. So based on the information that I've just given, it's ideal for you to trade NQ if price started showing lower prices or started showing weakness. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, NQ, as what has happened in the XY rally, we're expecting push down lower in Euro USD and in Pound USD. But I'll be discussing more about Pound USD later on. We pushed down lower. We're not having any retracement throughout all of these 3 weeks. We reached the rejection block and to the consequence of that discount wick. As you can see, once we reacted to it and retraced and closed right there. We have created a SIBI Fibonacci gap that is likely to be revisited. It's likely to be visited, in other words, before we continue running down lower towards the sell liquidity. And if we take out the sell liquidity, after that we have the rejection block, and with that rejection block we have the sell liquidity in close proximity. Going to the daily time frame chart, as you can see, taking out the buy side liquidity right there and starting running down lower. All of these potential areas that I was expecting price to retrace to, price didn't give us a chance, or didn't give us a retracement to the areas that pretty much I was interested in. So price touched the consequence of that discount wick and retraced. Bit of a reaction here. We have this Fibonacci gap. Price might react to it and start running down lower to the sell side liquidity, or it can just run up higher, get some premium before running down lower. So that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, Pound USD took out the sell side liquidity that I've been calling out for some time here. We have an immediate rebalance right there, and we have this Fibonacci gap, the SIBI. Price might retrace to the SIBI before running down lower, reaching towards this Fibonacci gap right there. And its levels, the consequent and the quadrants. Going to the daily time frame chart. Now, this is a specific level based on some studies that I've been doing. I cannot give you the exact reasons why I came up with these levels here, but it's better for you to go to your charts and mark these levels down, because it's highly likely that price is gonna be the candle bodies are gonna be stopping here, and the wicks may do some damage by reaching up higher towards this Fibonacci gap or the weekly Fibonacci gap in general. But my main concern is that price is likely by the bodies of the candles on the daily time frame chart or even the weekly time frame chart by the closure of next week will likely stop it's likely to be stopped here at this level and then push down lower to the sell side liquidity. So that's how I'm looking at it. We're likely gonna be expecting some retracement before the continuation to the downside. That's going to be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Wassalamu alaikum warahmatullahi ta'ala wabarakatuh.